So in tonight's video, we're going to talk about what's going on with the AI transition. I think there's some things to unpack here and maybe make it a little clearer what I'm expecting to see happen. Let's get into tonight's video. Well, welcome everyone. Interesting markets. I was talking last night about the consolidation or the distribution pattern that's happening, and we haven't broke this thing down yet, but it's being driven for, best way to put it, is through, I think, a transition that's going on. I've been talking about going back to the beginning of 2025 and going through the year, talking about my expectations that AI would start to really show up mid-year 26 and beyond, and from the standpoint of affecting the productivity. And I still believe that is the case, but what we're seeing here all of a sudden is some serious issues about what it's going to do to companies. You know, we're seeing a multitude of things that I was looking at earlier, where you're seeing the price of chips going up, so that's starting to affect anybody that needs chips, right? The electricity prices are going up, everything. There's a back end of this that is causing some concerns. And then we're finally starting to talk about job losses and those type of things. Here's my opinion on what I think we see going on right now, is that no one knows how to respond or what the actual outcomes are, but they're anticipating the outcomes. And like anything, especially, I've talked about this, I've seen, I'm going to call it almost an emotional switch in the markets and how they respond. They tend to really surge in a way, and then everybody goes, well, wait a minute, that might not be right. So like I've said, and I think the generational switch from who's the primary traders, the boomers are no longer controlling market flow, pulling the trigger, so to speak. And not that that was better or worse, it's just different. And you see these things. This is something I've watched for a very long time. You have to realize I've been through, when I first came into the markets, they were still writing down what you wanted to buy on a piece of paper and walking it over to somebody, handing them a ticket and telling, giving it to a guy who yelled and screamed and waved his hands and got an order and then signed. All this analog world has been gone. And I watched it go from that to, electronic trading, ultimately the decimalization of the trades, and it just continues to evolve. And I was reflecting, and I've talked about this on this channel before, is that a lot of times when you go through these different, every change that we went through from decimalization, it changed market making completely. And I used to work for a fairly large hedge fund back in the 90s, and we were floor traders, and we were still doing paper then, right? And it started to transition, but when it went to decimalization, we traded in, sixteenths and eighths and quarter points, so there was a spread. And then when we went to decimalization, we're talking pennies. You could actually trade 1 penny. And when that happened, it changed the complexity. I remember I had went back to visit the hedge fund that I used to work in, and I left in 92, and this was in 90s, I think it was 97, maybe it was 8. I don't remember when it actually happened, but the guy that was the lead trader on this group, he was saying it's not like the old days. We don't, you can't even market make anymore, and it just affected the returns on the fund. It did everything. It was very, very negative. So every transition we've done, so we talk about the GFC. There was effects with all the money being pumped in and how the banks got supported, and that changed trade flow. And we just, every time we go through this, the pandemic was a huge switch. And now we come to today. And I think what we're looking at in the AI space is trying to figure out how things are going to come together. And initially, when you look at something new, you're guessing. And that's what I think is happening right now. I think it's going to take, I don't have any idea how long it's going to take to make this transition, but now the right questions are being asked, but I don't think there's material answers yet. So when we see a day like today that just all of a sudden, we open higher and then there's just a complete dump, I think these are somewhat random, but I think also that this is going to affect, I don't know how long it's going to take till we start putting things together. And everybody that's trading is thinking about what are the effects of the AI, the higher chips, the costs, and all these companies are coming into play. And it's going to get really interesting. So I'm not proposing that I have any answer right now, but I do think this is going to affect sentiment for a bit. How long? I don't know. But this is something, at least a theme that came up. It's been coming up. We've watched, some of the sell-offs with NVIDIA and the chip companies and then the big tech. So big tech's still in that rotation, but why? Because it's been up, 3 years in a row, double-digit returns in these indices, and some of these stocks are through the roof. So everything is readjusting and trying to evaluate where we are right now. And you make a lot of guesses about it. I'm still not seeing a lot of material information. I'm just checking something while I'm talking to you. We're just not seeing any material movements. And so I'll talk about the short-term database in a minute, but I just kind of wanted to get everybody to start thinking, and hopefully we'll get some great comments. I know a lot of you folks are quite involved in the flow and look at a lot of things, and with all of our eyeballs, we might be able to figure out where market sentiment is going. I still think we're locked in the trading range. I'll go through all the metrics here in a minute. This is the final show for this week, so we'll talk about the close of the week, and maybe we'll look at some weekly charts. There's a lot of different flows setting up here, and I think we just got to focus on this. I'll try to address some of these things in the Substack and see what comes up. It's just, we're in that very uncertain moment. And when uncertainty's there, you get volatility. And that's why you see drops like we saw today. I had a couple other notes here. So logistics is the next one, right? That's what was kind of being talked about today. So, it's been, I guess, taking different elements where AI is setting in and starting to disrupt and bring in the uncertainty. So there's plenty more to go. And so what's likely to happen, just a quick opinion, and this may change, but I think it's just really the sorting out of how disruptive these things are going to be. And I know I'm a big Claude user, and I can tell you last weekend I redid the data sheets and I used Claude Opus 4.6, and all I can tell you is that model is the most insane, most accurate. It's amazing. Usually when I try to update things, I get lots of errors. I mean, this thing was just clean. And it's there's a lot of rhetoric going around about Anthropic right now, but they own the world, in my opinion. I've been a fan for a year and a half. I pretty much, especially anything doing with programming, that's where I'm at. I've got a couple projects working right now that are actually mind-blowing to me on what this old man, 73-year-old man, can do in this world, and once you get involved in this stuff. So sentiment's going to be it's going to be flipping a coin, I think, from day to day. It's going to be all negative and people worried about everything to waking up the next go, well, maybe it's not that bad. So anyway, let's go ahead and discuss what we're going to do tonight in tonight's video. The goal here is try to set up the end of the week. I'll talk a little bit about Monday because I won't be back on until after Monday's trading next week. And I will have some thoughts out on the Substack. So get kendallreport.substack.com. Get that. It's $8 a month. A lot of you have been signing up. I appreciate it. You know, it's not a lot of money. Those data sheets are worth a lot of money. I should be charging $120 a month, but I'm not. I'm happy with the $8, just getting some mass adoption. Please share with folks that you know so we can build that up, because that's a nice foundation to keep my thoughts and my work going out there. So, all right, so let's go ahead and we'll come into the database here, and it's completed. So let's take a look at the run here. Is we're 67.28. This is fully invested, and this is a very big mode. Sorry about that. That's a very strong environment, and at the moment, because of where we are, what we're really seeing is just this grinding. So there's a bit of a leadership change coming from the standpoint of who's leading the show. You know, we've seen a bit more of the small and mid caps start to rotate in. They're actually leading the pack. And mid cap took over yesterday. I didn't look at the metrics today and whether it's still leading, but it probably is, because but I do think it was down close to 1.5%, but not important. But this is the regime that we're in right now. based on what I have on the screen here, is very robust. And the fact that that's my point, we got a 1.2% move down on the S&P. It was, a couple percent on the NASDAQ, as I showed you last time. We'll go through here in a minute. It really has a different configuration. Just like I talked about gold and silver last night, silver is a much weaker pattern. It showed that out again today. So, but these metrics here are really, really good. And you can post, it's going down 10%, all that, I don't think we get any 10 percenters here. I mean, we got 1% today. It would be unlikely that we have that. And we'll go through all the algos and at least see what's set up here. I still think, straddles, big wide straddles on S&P and some of these indexes will, just suck in the money on short, taking in the premium off these options. I lived as a market maker, and I can tell you to try to get a professional trader to own an option outright is pretty hard to do. There's going to be a spread somewhere. There's going to be some income coming in to offset the attrition of the premium, and we just never went long. We just took all the money you guys wanted to buy. So the market makers are always willing to be on the other side of the spreads, most time 2 and 3 to 1 ratios. So, but the point is that, but I think that's why that's the play, and it's been the play since October. There's only been one time where you probably had a little trouble with the bottom side of the wing, and that's it. So just know that's probably still the strategy. Is like my expectation is people are going to get negative, and then they're going to go, oh wait, maybe it's not as negative, and they're going to come back on the other side. So let's move on. Let's go ahead and move on to. Let me just get 1 second here. Come up on screen. Thought I had everything set, but let's fix this. All right, so here's S&P daily. We're still working this weird bubble. It looked like we were trying to form some kind of trade in here, channel, but we've flattened out. So now it's still, we are like Monday, Tuesday, trying to rally back into this pattern here. But I showed you this last night. Let me just. I mean, this thing's a mess. There's no trends in here more than 3 days, 4 days, and this is all noise, and it goes back to. Yeah, don't forget, if you have been thinking about getting my indicators, they do have a Valentine's Day sale for 80% off on the platform for TradingView, by the way. So if you don't have it, get it. This is the time to buy. Okay, so but yeah, look at this noise, and this goes all the way back to October. I've been pointing this out. We had this one blip here, and then everything stays in this range. The bottom end here, this is 67.40, but here's the 68.20. It's kind of expanded a little bit, but we're right there again. It's been, every time it's been down in this range, it's a buy. So when we look at the algos, they're all signaling that at least some momentum's going to come back in, some upward momentum. There should be some move back toward the moving averages. I mean, this is, well, we get an exciting day like today. If you caught the sell-off right, then you can do pretty good there. But as far as a major sell-off, maybe not. I'm just going to show you something here. See if I can get this to show up right. As you're looking at, there's 3 Fibonacci targets here. They are 60, 68.21, 67.36, 67.36, and 66.84. So this is taking us all the way down to that big reversal we had a couple of Fridays ago. And tomorrow's Friday the 13th. So if you're superstitious, then be careful. It might be the day you make a big mistake. But as far as this pattern goes, it just continues to be this sideways block that we've been locked in. I don't see the acceleration coming or anything of that sort. Okay, so we'll go to the weekly, and you'll see this makes that pattern even more visible, because you're seeing just this sideways movement. This is November. This is the October range. Like I said, we had that one little blip, but this is getting pretty rough here. We're going all the way back to the Christmas week and sideways, just a range bound. We're getting these. We're getting a little bit of a volatility bubble on the weekly, but look at the red dots. They're still saying we got a little blip. All it's saying is that we're going to stay in this pattern. So what are you saying? I'm a good trade. So I love these comments. Bob's still bullish. I haven't been bullish. I'm just the indicators and the database is bullish. Yeah, it just says you have to remember a lot of these stocks are getting hit. We don't own them, so you're just listening to big broad numbers on the database. You don't know what we own in that database, do you? Unless you have WaveTech, then you know. But the point is, a lot of these stocks we're out of. So so it's just saying the index. We're looking at indices, not looking at individual stocks. So so it's just stable. I mean, we could come all the way down on this chart to the 40, which would be 6,600. And overall, this pattern is still going up. So when you have the ability to do what I do and look at 14,000 plus stocks, all in contacts, and then that's why we use the database for sentiment. That's primarily what it's for. And a lot of the stocks that are in there, I should take a look and see. I think I have a Mag 7 portfolio put together, so you can watch these little groups. That's the beauty of WaveTech, is you can put baskets together of different stocks, and you can get a better feel for the individual breadth within those baskets. But on an overall basis, when you're looking at 14,000 symbols, that gives you a bit of everything. That would be in 2024, when everybody was saying it was going to be a down year after big 23, and I was telling you it's going to be an up year, and it's going to be another back-to-back double-digit year. A lot of people were telling me how wrong I was then, too. How'd that work out? Listen, this the whole markets are about probabilities, you know, and it's always nice to go. There's some guy on Twitter, I don't know who he is, but it's always, any day I'm wrong. Oh, it didn't work. You know, nothing works every day, but what we generally have been seeing, and what I try to bring this out and zoom out to about 30,000 feet, then we'll get into 10, and sometimes we'll get into, you know, walking right up into the in front of the stage. But the reality is, this is kind of extreme. I told you the 21-week moving average is the place you want to be looking to buy. So the 21-week is right here. It's right where we went to today. And this is what I was trying to indicate on the front end of the video, is that this sentiment's going to change day to day. It's going to be, oh, it's terrible, logistics is disrupted. No, it's just, these are just overreactions, and that's what happens in this type of a regime where we're in a sideways pattern for, we'll say, at least since the last 6 to 8 weeks. But you can see here that you can go all the way back here to, what is this, November. We got that reversal, and I bet let's do it just for fun. Look at a line graph. You just look at the closes. Take a look at this. We've just been within market grid, slight upward slope. So that's been the argument, that we're in this slight upward slope, and now we're just going into a complete sideways type situation. So that all I'm trying to do is give you guys, like I said, if you just straddled this, you can see where the lines are closing here. So, all right, let's move on. Let's go to NASDAQ. NASDAQ's got a little bigger pattern. I talked about this the other day. The SMA 40 is going to be where you want to be a buyer here. This is a weekly chart, so we're going to start from weekly, and we'll look at the daily. But there's definitely a fade coming here. And I remember back when Bitcoin was $104, and I told you that it looked like we got a decline into March. Looks like that's still the case, right? So, but this is a classic, what I show you folks all the time, is you get this upward slope, the angle of attack here. You can see on a weekly basis, it's even forecasting, staying just at or below on the top end. Are just coming down, and then the 40 period moving average is rising up. So we should stay within this range. So top end probably 25 to 75, downside probably coming over here into about 24,300. So we should be staying in that zone. And like, it's just, I mean, this is solid, except for we're going to go flat. There's going to be more choppy, I would say, you know, into end of April, maybe May is where you're going to end up. So, you know, get ready. And there's a higher level of volatility. The beta is much higher here than it is anywhere else. Let's go down to daily, just summarize, then we'll get through the metals and we'll call it quits. I'll do some questions then. So you can see here, we got a little trend down here on the a channel trend coming into market grid, but we're going to get a bit of a move towards this 10, maybe get back up to the 21 here, which is going to put us at 25.4, and the 200 is going to be an absolute floor. If you see the 200 and it spikes down, then you want to do that. Yeah, there's just, I see somebody, it looks bearish. That's usually where a good point when it starts to look bearish where you should be looking to buy in here. We'll see how it all plays out. We're getting a bit of a bid. We're up not much, but 675 up on the futures right now on the S&P. All right, let's move on. Let's do gold. Gold's got that channel where I think we still stay the 40 day 4707 is going to be the bottom. I think we stay right around here at this 4970 in that range is going to be a pretty good range to watch. But I think gold is not broken. I have to be careful about the words I use because you folks will assume something that I'm not saying. I just think we're going to stay right in this line where the red dots are showing at right around 5,000, just waffling around 5,000. That even number is going to be, we're just going to pivot on both sides of that. Yeah, we'll go to silver. It's still big time in play. That's what I was talking about yesterday with silver. It's the 10, the short term is trying to show some strength. That's enough to keep us down in the bottom end of the range. We got it right here. Let me show you something here. We got this right here. We got an STX buy signal, which means 1 to 2 days sideways. And you can see what the red dots are projecting us back up into this downward sloping 21. We should try to rebound back over the 10 and get it and stay in this region, and you got a rising 21 in the middle of this. So this is kind of the demand line. The market's going to want to come back up here to 84 bucks on silver. But this is a pretty ugly chart overall because we could see an entire rollover ultimately getting down to 52, which would be close to a 60% decline off the top. So right now it looks like consolidation. As far as that next leg down, I'm not sure that's going to happen. Let's go to weekly real quick because this market has, this big reversal and the algos showing that we're being projected down would tell us that 66, 62 level is going to be your support zone. I don't think you break below that. 62 is the number I've told you is the pivot that you're going to want to watch. If it takes out 62, then look for 58. 62, 58 would be an extreme, probably a buy down there. But it's going to be a pretty rough road for silver here for a bit, include possibly all the way into the end of March or beyond. Is depending on what kind of price action you get here. If we get through that 62, that's going to set a whole nother level. And you could come back. Let me bring this up. It's possible you come all the way back in this base, which is 48, 42. This whole rally is possibly going to get completely erased. But like I said, you got this 21 weekly in here around 62, 65. That's where you'll watch for action that is telling you there's maybe some sort of reversal coming. We'll stay with the weekly here. Bitcoin's in that similar pattern. The 200, this is weekly, 200 week moving average, and this declining 10 week. This is the wedge we're likely going to stay in. You can see the forecast is kind of flat here. The momentum is still bleeding out. There's no doubt about that. So that's going to be, I think, an issue going forward. Bitcoin's stuck in this range for a while. Not sure when we'll see or if, anything much over 80, 82 is probably going to be the top end here. This is 80 right here as you're coming into, and possibly down the road we'll get into April or something. Maybe we can get a penetration, but I talked about this the other day. These three moving averages coming down, each one of these, if we do try to rally, we're probably going to get a rejection off around the 10-week, and then come down. If you get up, then the next one, as we come down the timeline, then it's going to be 80, 86, and that's going to be your next resistance. You probably, if you do trade up there, you can get another down. It's going to take at least until fall to try to work off what happened on this last leg down. So you potentially got A, B, C down. You can get an A, B, C, and then get up to this resistance line at the 40-week. So we'll see what happens. But let me draw that in, because sometimes I think people understand what I'm saying. So this is what I'm talking about here. So this would be the big pattern is like an ABC here, and then you'll get a move up. That's what I was talking about. You come up into this, you get a reaction back, and then each one of these things will be probably your reaction. The only key to watch is that we stay above this 200. But if what we could do, depending on what happens to this downward momentum, that this arrow could go all the way up to this. This is going to be your key high here, and we'll probably come up. I think we get some kind of ugly pattern, and it just consolidates down here. Going to be, like I said, if we go down that line, July to October, some range like that is going to be I guess the key levels to watch. So lots of work down here. Let me get rid of this, and let's do a quick daily analysis. Yeah, so that coincides with what I was just talking about. So if you folks that have the indicators, when you start to see like a pattern like this, you can get this dot. That is going to be your pivot point. If you were to rise above this level, which is 81.2, then you'd probably then you'd be getting an extension. You almost could proclaim a low, and that would be perfect. And it's interesting that we got that big spike down to the number nobody mentions, 59,930. They always say 60, but it actually went to 59, just a touch under, a few bucks under. And then we get this wedge, and this would be the target of this wedge, up 80,000. Everything's coming to 80. So there could be a decent trade if you're trading this thing. But the algos are showing stability as we get out here, coming into the end of February or something like that. All right, I'll come back on screen. We probably get done it's 40 minutes in. Let me just see what you folks are talking about. Yeah, sorry, I've been having trouble sneezing tonight. I'm not sure what's going on, so that's why I didn't have any sound there for a little bit. You guys didn't want to hear that. Yeah, Gillian, I don't know. Did you change any values on the ppms? Uh, Sometimes you have to rescale them, and I would just do, uh, where you click on the screen and just hit rescale, and then that'll fix it. They look kind of weird. So, all right, hang on. Yeah, we'll see how this plays out, but I always feel good about the WaveTech. I'm going to produce something. I just had someone write my technology was written up in a scientific publication, PhD level stuff. So uh, that's a nice. I'm going to figure out how to get that out there. So nice to have third party tear your stuff apart. Let me just see here. Yeah, John Wick 008. Yeah, we could go to 6,900. That's within the realms of what I was talking about. It's fine. Um, yeah, that's a tough one if you're being long all day. Let me just look at one more comment. Not a lot of things for me to talk about, but I'll come up with a summary here in a minute. Yeah, that's what I'm saying on SPX. It looks like there's a little bounce coming here. Yeah, there's not a lot of selling. Listen, that database for me, I've been using since 1998, and that's all the metrics, the 42%, and all the metrics that I talked about. Those were developed by watching this stuff like unbelievable. And I'm about to run kind of a model. I actually have a model that's in Portfolio Expert that actually runs and makes the decisions off the database, and it's done really well. It doesn't trade very often, but it has done really well, especially on the intermediate level. But it kind of uses some intermediate and short term, and I'm actually going to be working on building that model. So here we are, folks. Friday, not a lot of questions. Looks like that I could respond to. Feel free to post something while I'm talking here, but I think what we're seeing is what I set up at the beginning of this video tonight is really just uncertainty and people trying to figure out what does all this mean. Is there going to be a giant disruption? Yes. What does that mean for the stocks and the companies that are being disrupted? I would only say this, it's probably a good time. It's like all the ideology around Bitcoin, when I had that viral post, all I was talking about is market mechanics. I never made a comment about someone wanted to know why this was happening, and this is why it was happening, as just the derivatives. So now the Bitcoin community is calling all the derivative trading fake Bitcoin. So when you don't have any answer for somebody and you lose, you always blame and call the other guy a name. So the derivatives, like it or not, are setting all the prices for Bitcoin. And it will be like that from now on. There's no way to kick Wall Street out once you let them in. They know everything you don't. They know how to manipulate prices. They know how to move markets. I need to do a video on and show you folks how price discovery. So most people think, I'll just say this, most people think volume moves markets. Volume does not move markets. A lot of time when markets are moving, there might be volume, but classic is the rally that is going up, and people say, "Oh, it went up on low volume." And I'm telling you right now, I will pay attention to volume when they start telling me that I don't get the benefit of a price going up because it didn't trade enough volume. Till that day happens, um, I don't care about volume. Because I've seen markets go up on air, and then once they get to a level, then the volume comes in, consolidation, and my favorite rally sell-off is low volume. The lower the volume there is, the better it is, because low volume rallies or sell-offs can go forever. It's when you see silver was a perfect example of its spike a few Fridays. I think it's 3 Fridays now. Is that the volume is usually climactic low or a high when you get the high volume. It doesn't mean it goes up and spikes up at all-time new highs and it did it at a high volume. That doesn't mean there's more prices. That's usually all the bagman showing up to buy that last spike. And so just know derivatives are in everything, whether it's stocks or index trading. That's what sets the price. All prices are set on the margin or the float, and that's just the way it always has been, and that's the way it always will be. And I have a pretty big history. I've done a lot of OTC stocks, pump and dumpers, and all that stuff. I've been behind the scenes on some of these actions 20, 30, maybe more than 30 years ago. And I've been behind the curtain, and it's always interesting. It happens. Now we're getting some questions. So you guys are. Yeah, so on the 200, there's actually an envelope that you can put on there. I wish all of the indicators had that, Green Garden. No, it's on all the 200 days. It should be on there. It's under, I'm not sure what it's under. Draw deviation bands. That's a very bottom of, here, let me show you. This is the ppm 200 at the very bottom. This check here is draw deviation bands. It should come up. I don't see a way to change those colors either. So I think you're kind of stuck when you whatever it shows up. So if you have the wrong color background, it might not show up. That might be what's happening. But that's all you have to click. I'm just reading something here. I would say, John, on your question about the ppms intraday, yeah, John Wick, send me an email on the subscribe to the database, okay? That's got to be a private link. We're not actually actively marketing that right now, but I can help you with that. So just send info@kendallreport.com. Yeah, so the V bottom, and so we'll go back and forth here. But you can see right over here was, what am I on? Bitcoin. So the day that big plummet, then this is daily. The next day where we got the reversal, it had all, if you notice going down right where my cursor is, right down, you got a V on the 10, and this was forecasted. And we also got an STX buy signal. So you had V's and the STX buy signal, which is anytime it closes under this orange line, that's like the best trade you're going to find. It was 10,000. I think it was a $10,000 move in Bitcoin right after that on the daily. So, but as far as all those V's, whatever chart you're used to watching, hourly, 5 minute, they show up everywhere. So there's no like best time period that I'm aware of. Yeah, I'm just looking at a couple comments here. I'm just trying to look at yeah, I'm gonna go ahead and bring this up real quick here. So this is the Meg 7 portfolio. So this is what Meg 7's done, just trading it. So you got 23, 48%, 24, 67% return, 13 last year, and now we're minus 5.9. We only have 2 of the 7 long right now, and we can take a look at that. Open positions. So we've had Google on since August of last year, August 11th. It's up $108, up 53%. And we've got Apple on, and it's underwater now. It was doing fairly good, but Apple's been coming in here pretty quick. So right now in this portfolio, we look here, we're only 50% invested. And those 2 stocks are 42%. So we got a lot of cash around right now. But you're up a lot. 103 years, a lot. Yeah. And it might be that buy and hold might have been actually better, but this is just managing. And you can see here the trade log. This is all the buys and sells going back to, what was it? This I built this in 23, so this is all the stuff going back to 23, all the trades where it was bought and sold and all of that. And there's other details you can get to. All right, folks, I think we're pretty close to. Yeah, Iron Trader, thanks for showing up, man. Appreciate it. I will do this. Just so you know, I'm not a crypto guy. I'm a quant, and I will take a look at XRP. Bear with me. I'm sneezing, so you guys can't hear me. I didn't. Anyway, here's XRP. Looks like it's got a little upside here, but right at 94 looks like is the peak. We do have Fibonacci targets up here. It has done the volatility. This is that volatility bubble, and we're looking at this tightening up of volatility. So it's certainly ready to go. It looks like it's got a little pop. Maybe that will happen. Bear with me 1 second, folks. Okay. All right, folks, this is going to be it. Appreciate everybody showing up. We're right at just under an hour, so we did a little Q&A there. Yeah, who is saying that Bitcoin's dead? I haven't said it. Oh, I see. I'm sorry. Anyway, all right, folks, this is going to be it. I'm like out of control. My nose is blown up. I don't know if there's dust in the air or whatever. But anyway, thanks for showing up. I appreciate it. And we'll see you on Monday night. That'll be the next broadcast. So thanks again. And I'll see you next week. Have a good weekend, everyone.